Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So today as usual we prepared the weekly report and there we considered two major topics. First is recent CPI numbers and of course the statement of the Jerome Powell's press conference, the speech of the Fed, and actually it's really big conclusions that we have made today on these two moments. Concerning CPI, in two words speaking, we think that the decreasing of the nominal CPI is just purely the statistical result. So it means that, in two words, keeping it simple, now the inflation in current months is compared to the highest level of inflation that we saw in last year, and the top of the inflation particularly was in May and June of 2022. That's why when we are comparing current levels of the inflation to the levels to the highest levels that actually we get, so that explains why the inflation is slowing down, but in fact it remains stable. And actually as soon as in 2 months, probably somewhere in August and September, we will see that inflation is stabilizing, starts rising again, and we suggest that it should be around 4.5%. So that things that we will see, and actually score inflation is an example. And these numbers are of course not the ones that Fed would like to see, and that has led to the really frustrating comments from the Jerome Powell. So in fact, based on recent statement, we see that Fed doesn't know what to do with the current situation. Taking it all together, promising on the higher rates and that inflation will and should turn up again. So both of these combinations tells that it is too early to borrow the United States dollar. And if nothing actually force majeure will happen, nothing will be broken in the United States economy and any collapse will happen, it could mean that current rally that we see right now is temporal. So it could last maybe for 1 month, and 1 and 2 months, so euro currency could reach some high standing levels. But this is not yet the sharp reversal. It's not yet the changing of the major tendency. But this, of course, valid only if nothing terrible will happen in the United States economy. If somewhere really clear signs of crisis and really big events will happen, something like the banking crisis acceleration or defaults or something of that sort, it's massive deterioration of the economical conditions, Fed, right in the blink of an eye, turn to the quantitative easing and start cutting rate immediately, but not yet. Currently, it's not happened yet. So based on all this stuff, we have the short-term vision that euro currency still could climb higher, or at least remain on the surface, do not show any significant collapse. But in the longer term, the bearish perspectives are still valid, and within a couple of months, the situation could change once we will get new numbers for July and August inflation. Besides Fed's promising to raise rates in July and probably in September, because August will be the pause in the meetings. So that's what we have on fundamental background. On the technical side, technically it's also signs that euro currency could show more extended upward action. We do not see lots of the shorter term charts, but for example on the weekly chart, we'll take a look at it. You can see a few moments. First of all, clearly we have the divergence between the MACD and price performance, and this is not kind of the divergence that we usually treat as a bearish sign. Yes, it exists. Maybe we will get even triple divergence here if market will show another top, but currently it's more like the bullish dynamic pressure. And as we mentioned this week, as one of the major determining factor, that's depending on the breakout of the small candle, its direction will depend, and indeed take a look once market has broken it up, and it will continue to the upside. So from that standpoint, and the fact also that market take a look hasn't reached even 30% support on this downward direction, all this stuff looks bullish, and we could consider in the midterm within the few weeks 1240, 1275 and nearest target actually on the euro currency. On the daily chart, meantime, market stands at overbought, and actually Friday brings no new information, mostly stands the same, and as we said, it probably should be quiet, just because market at overbought. But it stands above the major 618 level, and it already has been broken with a really thrusting action, which points on existence of the bullish context. And from that standpoint, actually our task remains the same. Watch for pullbacks, watch for levels, and watch for bullish patterns that might be formed on the intraday charts. In particular speaking, currently we do not have yet the patterns, but overbought suggests maybe more or less extended pullback. On the 4-hour time chart, I suggest that we could keep an eye on this nice cluster, so around 108.60. So you can see 108.80, 108.85, so around this level. And this is most probable level where euro currency could stop retracement and turn in an opposite direction. At least it's rather strong. Currently we do not have any patterns yet. It's just some reaction has started, but we should keep an eye on and see what will happen. So for now, it seems that this level might be important for any short-term position taking. So that's actually what we have currently on euro currency, and let's see how all the situation will develop.